Yeah, it's interesting, isn't it? I mean, there've been, huge ETF buys and everything else. I mean, Bitcoin's always counterintuitive. It always does what you don't expect it to do. And I think, I've talked about this in other podcasts. I think there's some paper Bitcoin out there. I mean, I think there's some people who've shorted it and continue to short it. They're going to be wrong and they're going to get their faces ripped off. And because of that, because of the financialization of Bitcoin, and that's what, I mean, look, we had to go through this stage, right? If we want Bitcoin to be global sovereign money, it's got to go through the stage of replacing the old money. And so it's got to be adopted by banks and, insurance companies and sovereign wealth funds and everybody else, and ETFs and all of that.
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. Lepard starts with a reality that many investors underestimate. Bitcoin behaves like what he calls a wild animal. It's highly volatile, prone to sudden drawdowns and explosive rallies, and extremely difficult to time. This volatility creates a paradox. On one hand, it scares people away. On the other, it's precisely what generates its long-term returns. He emphasizes a critical idea. Missing just a handful of Bitcoin's best days can eliminate most of the gains. That leads to a simple but demanding conclusion. If you believe in the asset, you cannot trade it actively with precision. You have to hold it. This is where the familiar strategy comes in. Buy consistently, dollar cost averaging, add during downturns. Hold through volatility. Not because it's easy, but because historically, that's what has worked.
One thing I know about Bitcoin, I've been in a long, long time, is it trades like a wild animal. It's very hard to predict what it's going to do. and that's why,
true.
and it's hard to hold it because of that, and because you get these big drops, these big rips. And look, if you miss the best days, I mean, Fred Krueger had a great book on that, Bitcoin 1 million. If you miss the best days, you're going to miss all of it. So you got to, I mean, there's really only one. If you believe in it, you understand what it is, you realize it's non-sovereign money that, we all hold. The only solution is really to just buy it, hodl it, and forget about it. And then dollar cost average it or buy it on the dips. I mean, the one thing I will say, though, is the power law model, which Fred and Stasi and some other guys have kind of cooked up, does seem to be pretty good at giving a sense of when you're on the cheap side of the ledger and when you're on the expensive side of the ledger. Right now in the 70s, the median power law value, I think, is like 130, 140, that area, that range. And, the extreme would be like 200 or something or more, 250s. So at 70 something, it's fairly cheap. And at, 200 and something, it'd be more dear. So it's not a bad time to be buying it right now. The sentiment's been pretty shitty until,
Yeah.
not everybody's using it as money. Some of us are. I mean, I buy things with Bitcoin from time to time. I mean, I pay some of my vendors. I have an electrician on Cape Cod who accepts Bitcoin, but you're right. It's not widely used medium of exchange currency. We're still in the early days. You got to get your Strike wallet up and running. You got to get your sats there so that you can, make payments to people, but it's happening. And I mean, Square and Jack Dorsey is put it on their site, and I think Walmart and some others have adopted payments in that format, and Steak and Shake will take Bitcoin payments, and it's becoming more widely used. But yeah, we're still very early days in terms of actual usage. I thought stable coins kind of helped address the issue of bank seizures and so forth, but I'm coming to learn that they don't, that they can actually be sanctioned. Yeah, and I mean, if you look at kind of a command and control economy like and technological snooping on everybody, they can see every single financial transaction you make. And I mean, there are countries in Europe that want to ban cash for just that reason. They don't want you to be able to do private transactions. And Lightning transactions are extremely private and hard to trace. The surveillance state obviously does not like Bitcoin. They obviously do not like Lightning. But if you want to have private money, in my opinion, it's the best solution. Yeah, it's interesting, isn't it? I mean, there've been, huge ETF buys and everything else. I mean, Bitcoin's always counterintuitive. It always does what you don't expect it to do. And I think, I've talked about this in other podcasts. I think there's some paper Bitcoin out there. I mean, I think there's some people who've shorted it and continue to short it. They're going to be wrong and they're going to get their faces ripped off. And because of that, because of the financialization of Bitcoin, and that's what, I mean, look, we had to go through this stage, right? If we want Bitcoin to be global sovereign money, it's got to go through the stage of replacing the old money. And so it's got to be adopted by banks and, insurance companies and sovereign wealth funds and everybody else. And, and ETFs and all of that. But when you bring all that in, you bring in the ability to rehypothecate it, to short it, and to write options against it, and have futures and all of that sort of stuff. So all that stuff, in my opinion, is kind of suppressed the price. And the signal right now is pretty easy to kind of get depressed about, well, gee, Bitcoin really isn't going anywhere. But if we look at how Bitcoin has behaved in the past, it's done this in the past where it just sits there dormant, and then it wakes up one day and it goes crazy. And it did this in 2020, in October 2020. And usually it does it right after gold's had a big move. And by the way, the last 2 years, gold had a really big move. Gold went from 2,000 to 5,000. So in 2020, in fall of 2020, Bitcoin was $10,000, I think, going in September. And 7 months later, it was at 60. So it did a 6x. Now, I'm not suggesting we're going to do a 6x off of 75, but I think we're easily going to do a 2x and maybe a 3 or 4x when it breaks free on the next run. And I kind of see that as being related to or tied to the next Fed monetary regime. There are all these interesting things coming together at once. We've got a big deficit to begin with, but we got the war is going to increase the deficit. So it's not making the fiscal situation any better. That's Lynn's "nothing stops this train" meme. And then we've got, Powell, who's tried to be tough on monetary stuff and has not cut rates the way Trump wanted. And he did cave in, and by the way, and gave up a little bit of by going back to QE. He didn't call it QE; they call it reserve management purchases, or reserve purchase management, something like that. But anyway, it's 40. It was 40 billion a month. Although in last Monday they just took it down to 25, which I think is kind of a head fake. There's a big change coming, right? Warsh is going to be made Fed chair in a month, assuming they can get him, approved. And my sense is that ultimately, right now, they're, Senator Till is blocking that. He's blocking it because he wants them to drop the prosecution of Powell for lying about the building cost overruns. And I think they probably will. And the reason I think they will is that they'll view what Warsh is going to do as being more important and more urgent. And so Warsh will get in there. And I wrote about this in my quarterly. It's on my website. But, Warsh will get in there, and I think he's going to start cutting rates. He's already indicated in a Wall Street Journal editorial and several public speeches his belief that AI productivity increases give the Fed room to reduce rates without spiking inflation. All indicators in a regular world, all indicators say the Fed should be raising rates. We got inflation everywhere, and it's about to get worse as a result of the war. And yet, I have a non-consensus view, because I looked at FedWatch recently in the June meeting. The odds of a rate cut are like 4%, and I think that's horribly wrong. I think there's a very good chance Warsh is going to get in there, and he's going to bully the board into cutting rates. And that's going to start another credit cycle, and it's going to light fire underneath Bitcoin and gold and silver. Although gold and silver already had a big move, but I think they'll start trending higher as well. But Bitcoin in gold terms is incredibly cheap. I've been selling gold and silver things to buy Bitcoin because it's just so asymmetric right now. So it's a very interesting time, with all these moving pieces, and the war is just another one of them. But Simon kind of thinks the war is theater. There's an argument that maybe it is. I don't really know. I don't really know. I have theories about how and why it happened. We'll have to see. One thing that's definitely proving to be true, remember when they started, he said it'd be a couple of weeks, a month at most. Well, here we are 6 weeks into it. And this echoes what Rumsfeld said, back in the Iraq War. Oh, this will be 6 months, a year at the most. Of course, we were there for, 5+ years or 6 years, whatever it was. It's easier to start a war than it is to end one. And so there's a lot of disruption that's going to take place as a result of that. And that's going to be chaotic for the global economy. Luke Roman has done a great job of pointing out, the second and third order effects. So if the strait remains closed for a long period of time, as measured in another few months, it's already starting to impact some supply chains. You see.
Lepard is clear that Bitcoin is not yet widely used as a medium of exchange. However, he argues that this is normal for a new monetary technology. He frames Bitcoin's evolution in stages: store of value, current dominant phase; medium of exchange, emerging; unit of account, future possibility. He points to early signs of adoption: individuals paying vendors in Bitcoin, businesses beginning to accept it, payment infrastructure improving, e.g., Lightning Network. But he doesn't overstate it. Compared to traditional systems, credit cards, PayPal, cash, Bitcoin is still in its infancy in terms of transactional usage. What matters more, in his view, is the foundation. Bitcoin is non-sovereign money, not controlled by any government, and not easily debased. That property is what gives it long-term relevance.
Jet fuel in Europe is up, 90%, and you've got countries in Asia, restricting use of hydrocarbons and fuels because they're running out. The economy is going to take a hit, and in a highly leveraged economy with a stock market at record valuations, if things really start to take a hit and slow down, that's not going to be good. And we're running, the thing that's most amazing to me, Paula, is that we're running this deficit, this 1.8 last year, probably 1.92, maybe higher this year. And we got a chart on that in the quarterly. This is with a healthy stock market and full employment, relatively full employment. I mean, and historically, in 2008 or 2000, or COVID, when the stock market takes a dive and employment takes a dive, the deficit totally blows out. And so, we're running a big deficit before anything's broken. Wait till something breaks. If something breaks, I'm not saying it will, but it could. If something breaks, the deficit's going to get only larger. And so these all lead to, what I'm kind of famous for and what I've been pushing for, what I wrote a book about, which is, eventually, their alternative is going to be to let the whole thing collapse like 1929. Everyone's going to go bankrupt because nobody can pay back the debt, or, create money and print like crazy to try and get the next credit cycle going, the next round of growth going, and, what I call the big print. And so I think that's on deck. But, whether they'll do it, before or after we have a correlation of one event, I don't know. By correlation of one event, I mean something really breaks. Like in the GFC, housing market broke, banks broke, everything broke. Paulson came in and said, hey, give us 700 billion of the whole, the ATMs aren't going to work in the morning. And so they gave him 700 billion. COVID, same story. We're shutting down the world economy. Everything was going to zero, including U.S. Treasury bond. There was no bid for it. So Paula came in and imitated Mario Draghi and said, whatever it takes, we're going to print enough money to keep this thing going. So that's a correlation of one event where something really breaks. That could happen. And if it does, the balance sheet's going to go from 6.6 trillion to 15 to 20 trillion. The alternative is kind of what I call just creeping debasement, where they up the QE number, they keep rates low. We kind of limp along, and we're definitely debasing, but not in a massive one-time big print. More of, Lynn calls it a gradual print. I'd call it, kind of a moderate print. But both of those things are inflation. Of course, the third alternative would be to let it all collapse, or to try austerity, or to cut everything back, et cetera. Although, we're at the stage where even if we tried, fiscal austerity, that would croak the markets and the economy. So they really are kind of trapped. And sadly, I don't think most people have any understanding this is going on in the background, because these things take years to play out, and everyone's time frame, attention span is about, one news cycle or a month or a week or whatever. People can't see that it's coming, but it is coming. And, I think it could happen this year, but I could be wrong. It could be 27, 28. I doubt they'll make it that far, but it's coming. It will win that game as well. I mean, yeah, I have no doubt that over time it will become the medium of exchange. It's just so simple. It's simple. It's easy. There's no credit card processor. It's final. Yeah, it works, and it's private and non-sovereign. So across all metrics, it's superior money. And there's only one metric by which it's not, and that's just awareness and use. And that's because when you bring a new technology into the world, and you've got a lot of existing technologies that work pretty well. I mean, PayPal and Venmo and credit cards and cash. I mean, these things all work. Why do you need something different? And you have to kind of start to understand what it is and why it starts off as a superior store of value money, and that's to me, that longer term, that's the most important feature of money, that it be sound, that it not be dilutable by politicians. So you got to start there. But once you understand that, then the medium of exchange follows right in lockstep behind it. I think so. I mean, it all depends on government policies. It all depends on what breaks and what doesn't break. I mean, they've had a couple of models. I mean, they want to avoid having a quote unquote big print. They'd like to slowly debase the currency and hold everything together. And they're going to try and do that. But let's go back to Hank Paulson's comments, because I think this is really important. I think people need to understand this. So Hank Paulson, for those who don't know, is a guy who was the Treasury Secretary during the Obama administration when, it was the Bush administration. The GFC, global financial crisis, happened in 2008. As we all know, there was a housing bubble. I mean, the Big Short, the movie The Big Short tells the story. There's a housing bubble. Everyone got way out over their skis, tons and tons of leverage. Banks were incredibly levered. It all came crashing down. And so he was the guy who orchestrated the rescue through that in conjunction with Bernanke and Tim Geithner. And, he's retired now. He's 80 years old, I think. And he basically, should be playing with his grandkids and not saying anything. And you haven't heard from him since then. I mean, it's been a long time, right? That's 16 years ago. So it's kind of like, okay, suddenly he surfaces and gives a mainstream interview on a mainstream media source, I think it was Bloomberg, and says, hey, the system is kind of broken and kind of could croak. And, we need to have a policy for break the glass on the bond market, and the kinds of things that James and myself and other Bitcoiners have been saying for some time. And, but he came right out and said it. I mean, he said it out loud. And to me, this is an enormous clue, just enormous, because why would he say it? Why would he say it now? Why would, to me, I think it just like when Bernanke took, we were doing quantitative tightening as recently as Q3 of last year. And they went from quantitative tightening to neutral to quantitative easing in the space of the fourth quarter, right? But when they were doing that, they always gave clues, like, well, the balance sheet, we might have reasons for reserves. We might, they float these trial balloons. So to me, what Paulson just did was an enormous trial balloon where he was basically saying, look, the bond market is a possible risk factor. It's a big one. If it happened, it would be catastrophic. People should go and Google recent Hank Paulson comments or recent Hank Paulson, interview and just listen to him in his words, and he said, and if so, we should have a break the glass policy where we got a plan on the shelf ready to go. My God, does it get any more obvious that that's what they're working on? So I think
because they can't let the system fail, and especially politically, it would be suicide. So
exactly. And so to me, this was just an enormous clue. I mean, and here it is. He's saying it 1 month before we've got a new Fed chairman, right? And we know the new Fed chairman, he's married to the Lauder family, to a Lauder, and she's a billionaire, and they're old friends of Trump, and he wouldn't have gotten the job if he hadn't, basically said some of the things Trump wanted to hear. He just wouldn't have gotten it. And he's friends with Besant, and Besant has talked about having a new Bretton Woods and how the Treasury and the Fed have to work together. All these things, by the way, are written about in my quarterly, which I highly advise people to read if they're interested. And so, we don't know what it is yet, but we know that in the back room, they're cooking up the next plan. They are cooking up the next print, and we don't know the shape and size and the terms and all that kind of stuff, but we know it's coming. And these clues are very important clues to observe. And, gold and silver have already smelled it out. And I actually think Bitcoin's starting to smell it out as well. I think the 60,000 spike bottom on Bitcoin was kind of the bottom. And, we bumped around here in the 60s and 70s for some time now. And actually, one of the things that made me feel that was a real confirmation of it was go look at a chart of MSTR, MicroStrategy. I mean, MicroStrategy really broke out last week. I mean, on Friday, very significant volume. It was up like, I don't know, 8 or 9, 10%. It was up a lot. So it's like, whoa. And so here's your levered Bitcoin proxy, really outperforming the market and really starting to move. And so, so we're in it. Well, I mean, grab your popcorn because I don't think we have to wait very long. I mean, I think, Warsh gets approved. If he gets approved, and I think they'll solve that problem. He'll be in there on May 15th. And first, next Fed meeting's in June, but, he's a new chairman. He can do whatever he wants, right? So who's to say he doesn't call, an interim meeting and say, okay, guys, here's the plan. Here's what we're going to do. And they roll it out. That's, look, I'm making predictions like, they're just guesses, right? They're educated guesses. I could be wrong, totally wrong, but I've been wrong plenty. But I'm just saying from this observer's eyes, that's kind of where I think this is going. And if they do that, no matter what they call it, no matter how they couch it, whatever it might be, smart market participants are going to look through it and go, oh, I get it. They're going to print a shitload of money, and I gotta get into stuff they can't print. And the two categories that fit in that bucket are, Bitcoin and gold. So off we go.
Bitcoin's integration into the traditional financial system through ETFs, derivatives, and institutional adoption is, in Lepard's view, both necessary and problematic. Necessary because it enables global-scale adoption. It brings in large pools of capital. Problematic because it introduces leverage, shorting, and rehypothecation. It can suppress price in the short term. This is a familiar dynamic. As Bitcoin becomes more financialized, It begins to behave more like traditional assets, at least temporarily. But Lepard believes this phase is transitional, not permanent.